But now to get some more insights on the news shaping the overall markets, for that we welcome in Ted Thatcher, president of Bright Lake Wealth Management. Ted, thanks so much for being with us. Of course, happy holidays. It does still feel like we are a little bit still in this holiday haze. But as far as expectations for the new year, I mean, let's look back at what really were your key takeaways of 2025.
You know, Jenny, when I look at the economy and the consumer, these several weeks leading up into this Christmas holiday season have been really positive. You know, we saw the Fed provide some more rate relief, bringing rates down. We saw policymakers update growth expectations for 2026 from 1.8% GDP growth to 2.3%. We saw the expected number for inflation for 2026 come down from 2.6% to 2.4%. Then we got that huge Q3 GDP expectation beat 100 basis points over what was expected. And so while it has been a very volatile year, especially the first half of the year, I think we're really starting to see stabilization. And there was so much talk around this K-shaped economy, this dual-lensed view of what was happening, sort of what was happening on Wall Street versus what was happening on Main Street. These key data points are real positives for everyday consumers. And when you pair that data with what's coming here as we turn the corner into 2026, I do think it paints a really nice, positive picture for everyday consumers.
Okay, and I think that's such a positive takeaway. As we were saying previously, I mean, it's been one of the most, feels like, disliked or criticized rallies that we've seen in recent history. And so curious your thoughts on some of the expectations you just outlined. I mean, does a higher GDP and lower inflation continue to signal the soft landing going forward?
You know, again, if we key in on the consumer here, what I'm really looking at is what's going to happen with the power of the consumer. We talk about the consumer and their ability to spend and how durable they really are. Sometimes I think we don't give the consumer enough credit, right? We are quick to criticize at times. But when you look at the sort of underlying view of what's about to come into view here with the big, beautiful bill and its actual monetary impacts for everyday Americans, we see the no tax on tips. We see, the no tax on overtime. We see an increase in the standard deduction. We see an increase in the child tax credit. At the end of the day, what that's going to do is it's going to put money in the hands of everyday consumers. And when you increase the M1 money supply like that, that ends up being a proxy for purchasing power and for durability when it comes to the consumer. And so we've seen a little bit of volatility, of course, when it comes to consumer sentiment and consumer confidence. But when you add those things to the picture, again, I think it spells a really nice Q1, Q2 for that everyday consumer. And I think what that will allow is for the market not to fixate so much on this inflation story that's been at the top of mind, and not so much on the K-shaped economy, but what the next steps in a stable economy will look like for everyday consumers.
Okay, so as far as now some of your key opportunities you're keeping on your radar, I saw you mentioned financials and JP Morgan specifically. So walk us through that mindset there, because I do know that we've seen, more and more of these best in class, best in breed type of companies emerge as more stable, and also just, I think right now, a good way to diversify outside of some of the volatility we see in, say, like the tech trade.
Yeah, absolutely. Of course, when you think about high growth, you always want to talk about that AI story. But I do think that there are these names like the financials. JP Morgan obviously comes to mind. They have a fantastic balance sheet. And really what I like about where JP Morgan is from a financial standpoint is they have so much high margin revenue. At the end of the day, right now, the 10-year Treasury has been stuck above that 4% number for quite a while. And so that pegs a lot of extra margin in there for the big banks. And when you look at those things and you pair it with the regulatory environment, there's a lot of regulatory tailwinds. Deregulation will affect the big banks. The intention, of course, is for it to spur more lending for small community banks, but that will also benefit the big banks as well. And not to mention, JP Morgan is on its 15th consecutive year of dividend increases, which I think puts it in a really nice position.
Yeah, and those dividend stocks, I also think are a good thing to keep on our radar as we, again, approach the new year, reset, reassess sort of everything that we're looking at as far as portfolios. And I did want to get your thoughts on gold, because this has become really the story of the last several months. But more recently, it's been the story of the last couple of weeks, where we've just seen new highs after new highs. I mean, silver as well.
Mm-hmm. Yeah, so much of the institutional and governmental capital has absolutely flooded into this precious metals market. And that has driven gold up to these highs, next. Obviously gold's been a little soft this morning, but until, the broader markets, institutions, and governments sort of re-rate some of how they look at U.S. treasuries, I think that capital is still going to continue to flood in that direction. JP Morgan actually just updated their price targets for Google in 2026 to over 5,000 an ounce. And so I do think that there's still a bull case for gold right now. And again, when we talk about how that's all dovetails with everyday consumers, until we see, the next domino fall where the credit markets kind of come down, that has a huge effect on sentiment as well, because it allows Americans, everyday people, to expand their lives with reasonable access to credit, to get houses, cars, credit cards, et cetera.
Okay, what a positive take, I think, on the last year, because I love to hear this optimism as we do just discuss some of the broader consumer trends. Frankly, the U.S. consumer has been so resilient. So really great points. And thank you so much for that conversation to kick off our show today. That's Ted Thatcher, president of Bright Lake Wealth Management.